Meta has been very busy this week between its layoffs, its big vice chair hire, and a report that it is looking into doubling production of its Ray-Ban smart glasses. There was also the big announcement around Meta Compute. I want to bring on Gil Luria from DA Davidson to give us some analysis on how he's putting all of this news into context. Gil, welcome back to the show. It's great to have you here.
Thanks for having me.
So, big picture, Meta's making all these changes. You look at the stock price for the past year, I mean, it's flat. And yet the ads business is still surging. There are all these changes to move towards the AI opportunity. What do you make of all this?
Yeah, I mean, Meta is the least expensive of the mega caps. They're trading in the low 20s. There's nothing else in mega cap land that's not trading in the high 20s or above. And that's really just because Mr. Zuckerberg is treating Meta like his own company, like he still owns it, which he does. And investors are just uncomfortable with that. He has this unbelievable business, right? His digital ad business is growing, just grew 25%. It'll probably grow more than 20% this year at very high margins. If he just let Meta be that, the stock would be a lot higher. But he's not. He's investing very heavily still in Reality Labs, and then investing even more heavily in building AI data centers that he's not even reselling. At
So,
least for now, he's just using to do R&D. And,
right.
and so investors are just uncomfortable with the fact that you have such a great business, but you're growing expenses and CapEx even faster than revenue. And that's just not what other companies are doing right now.
I was going to ask you this question at the end, but I'm going to go there directly. How long have you been covering Meta for now?
Officially 2 years, but really since before their IPO.
Exactly. So you've been following the company for a long time, and the question that I wanted to ask you, Gil, is we see this version of Mark Zuckerberg, which is making big bets and not accepting the status quo of I'm just an advertising business. Has that changed at all over the time that you've followed the company? Has his focus, is it the way of running the company? I mean, has it been the same all along, or has it shifted recently?
I think we've had some back and forth, right? There's times where he does feel responsible to shareholders. We had famously the year of efficiency a couple of years ago.
Right.
And during the year of efficiency, the stock more than doubled. Because that's, again, all investors want is, can you just be responsible with our capital? And when he does that, he gets rewarded handsomely on the share price. But to be fair to Mr. Zuckerberg, he sees a huge sense of urgency right now. He feels like on two different fronts, there's going to be a winner take all or winner take most. And he wants to and needs to be one of those winners. So one is the next hardware platform, right? We're going to go away from a handset to wearables at some point. And he wants to win that because otherwise he'll continue paying Apple and Google the 30% tax. And then on the frontier AI model, he feels like if he doesn't win there, he's just going to be relegated by those winning models and lose the biggest incremental economic opportunity out there. So that's, in his mind, he's doing the right thing. He's in founder mode and he needs to win. Now, to your point earlier about the news that's come out this week in terms of some layoffs at Reality Labs, and there were other stories about that, maybe he's willing to take that back a little bit, gesture towards investors that he's not just incinerating their money. But we'll only find out when they report and we get the magnitude of savings and the magnitude of how much he's willing to scale back ambitions on those two fronts. But again, it's very understandable. He thinks those are the two biggest winner-take-all markets, and he wants to be that winner.
Now, if you look at Reality Labs right now, the business is doing, I think, in or around $2.2 billion for the last 12 months in terms of revenue. It is obviously a fraction of what the ads business is. But I wonder, as you look at this opportunity for Reality Labs, how big do you think that business could get?
So in the short to medium term, we're just talking about the Ray-Bans, right? And maybe the glasses with the little projector, the $800 projector glasses. we're mostly talking about the $300 Ray-Bans. That is not a very big market, but it's how you get to the ultimate market of, again, the next hardware platform. Because eventually he'll be able to fit all the compute that we have in our handset into the glasses. And at that point, it's going to be as big a market as Apple's has. And that's what he's really focused on. The problem is the 2 billion of revenue is coming with about 4 billion of loss every quarter. And that's the problem, is that you don't need this much loss to build $300 Ray-Bans or even $800 projection glasses. You could actually do those for a lot less. And by the way, Google and Apple have their own effort to participate, and Samsung have their own effort to participate in these markets. They're not losing money the way he is. So he's really investing well beyond where the platform is now. Again, because of this notion that at some point in the future, 5 or 10 years from now, that's going to be the platform that everybody's going to have. And when you have that, you can be the one that charges the 30% tax on every application.
Now, all of this talent that he has spent a lot of money on acquiring, these giant contracts, what signals would you look for in terms of understanding whether or not those investments paid off? And I ask this question because a lot of that talent was researchers, and we know that researchers are really the thing to tie them to directly is how good the models are. And we know that the Llama family of models are an open source family. They've had some mixed reviews. And so are you looking to see that, hey, maybe the next family of Llama models, maybe it really excels on the benchmarks? Is that what we're looking for? Are we looking for ultimately the next wearables product to be a big hit with consumers? You just said the market wasn't that big. How will we know if this research investment will have paid off?
No, that's exactly right. The next frontier model from Meta needs to be competitive. You were being kind when you said mixed reviews. The last iteration of
I'm
Llama
a nice
was,
guy. I'm a nice guy, Gil.
yeah, I'm not as nice. The last iteration of Llama was a colossal failure. That's why he fired everybody and spent billions of dollars hiring a new team, is that the next model better be good. Because at this point, between what Google, OpenAI, and Anthropic are doing, they're pulling away. It's not like they're stopping in their tracks with the current generation of frontier model. If the next model from Meta doesn't at least catch up, they're in a lot of trouble. And by the way, they've probably wasted $100 billion or more doing that, between the capex, the salaries, and the operating expenses. We're at least $100 billion into trying to develop a new model. It better be good. Maybe this iteration won't be better than the other ones, but it would have to at least somewhat catch up for us to believe that the iteration after that would be better. Now, we don't expect it to actually be open source.
It'll be
Just
closed.
because of
Okay.
where the market, yeah, just because of where the market is headed.
Yeah.
And by
Yeah.
the way, we're not hearing good things about how things are going inside of Meta's Frontier Lab. It's in the organizational, cultural issues there don't go away just because you're paying somebody $14 billion. Those issues sometimes get worse when you pay somebody
What are we hearing?
that they're not necessarily having success with the development of this new frontier model. And maybe it's happening quietly, but the scuttlebutt in the industry is that they're actually the next generation of the frontier may actually not be competitive.
Last question for you. We have talked on this show about the relationships that all the various tech companies have and are building with Nvidia. It is obviously a very important company in the ecosystem. We haven't yet seen any headlines about any big partnerships between Meta and Nvidia, at least explicitly. And one of the predictions that we've had from a few of our reporters here at The Information is that we might see that this year. We might see Nvidia and Meta get together in some official way. How realistic do you think that is? And are you expecting something there?
So yeah, your reporters have done a great job. Anissa and Anita have done a great job reporting on Nvidia and Meta and Google's TPUs. And we would expect Meta to diversify away somewhat from Nvidia by buying more TPUs, and that's part of the story that they broke. But realistically speaking, everybody's still buying Nvidia. They're just playing
Right.
by as much Nvidia as they can because Nvidia works. They know how to use it. All their scientists know how to use it. It's available. You could plug it into the data center. You know it works. It's not, oh, will this next generation of TPUs be very good? Will the next generation of AMD be very good? Jensen Jensen's chips work. The next generation is going to work even better. You know that. And so NVIDIA will continue to be the lion's share of AI compute equipment for the foreseeable future. But all these companies, all of NVIDIA's customers want to diversify away. They don't want to be beholden to one vendor. So there's this
Right.
aspiration to diversify away. And right now, the main way to do that is to use or buy Google TPUs.
Great. Well, Gil, I want to thank you for coming on. It was a great conversation. That is Gil Luria from DA Davidson here on TITV.